Hello traders, Joseph here again. Thank you so much for joining me on another one of my videos. Now I'm slightly changing the way I make my videos, and what I mean by that is every weekend when I put out a video, it's most likely going to be a tutorial video like this one today. And every Monday I'm going to be putting out a series of short videos on all the major currency pairs and also a few others. And in those videos I'm going to be giving you guys technical analysis. I'm going to show you guys trade setups for the whole week. So anyway, without further ado, let's get into today's video. Now, if I ask you guys a simple question, what do you think are the best days to trade? Now, as traders, we do know that the best days to trade are usually when the market are more volatile. And from here, we can say that, historically speaking, Tuesdays, Wednesdays, and Fridays are usually the most volatile days in the markets. And hence, those are going to be the best days to trade. But if I ask you, what are the best times to trade? Now that's a little bit tricky to answer, because we all know that the Forex market is open 24 hours a day, from Sunday night to Friday evening. And that's because of the time difference between different countries. So I think you would agree with me if I say that it's perfectly reasonable to say that in some countries, like Australia and Japan, you would expect their currency to show low volatility in the London and New York session, for the simple reason that their markets are closed at that time. Because when it's day here in London and America, it's nighttime over in Australia and Japan. So if you're a trader and you want to trade the Aussie dollar against the Japanese yen currency pair during the London or New York session, then you'll probably not see any volatility at all, and you're probably going to sit there and wait hours upon hours upon hours with no results. So it's very important to know exactly when a particular market is likely to move, because we as traders need volatility to make money. And so if you can identify when the market is likely going to be volatile, then you can give yourself an edge in the market. Now, having said all of that, how true is it that the markets actually do that? Because I just use logic to explain to you guys how I think the market moves during different sessions. But can I at least show you guys that the markets actually do that? Of course, let's take a look at the charts. Now, it's very important that you use TradingView, because what I'm about to show you guys, it's only going to be possible if you're using TradingView charts. And the first thing I'm going to do, obviously, is I'm going to put my currency pair on the euro dollar. As you can see, I've got my currency pair here on the US dollar, and this is what I'm going to use for my example. And if I use logic right now, then I think it's fair to say that I would expect a lot of volatility on this currency pair during the London and New York session, and I can expect little or no volatility during the Asian session. That's what logic tells me. So how do we go about proving this is true? So if you go on TradingView, you set your currency pair. What you're going to do next, you're going to go on indicators, and you click on indicators, and you're going to type in sessions. When you type in sessions, a lot of results are going to come up, but this is what you want. As you can see, I've got this saved on my favorites already. So you need to click on that London, NY and Asian session, and then you need to go back here on settings and just uncheck the Asian box session and just click on OK. So now you can see that the sessions have been clearly divided, so you can see them. Now here we have the London and the New York session overlapping, simply because we know that the London and European sessions usually start at about 6-7 in the morning, and it ends about 3-4 in the evening, in the afternoon. And the New York session starts at about 12-1 in the afternoon and ends at around 8-9 in the evening. And after that we move into the Asian session. So how can we clearly see volatility? From here you can obviously see some kind of, but what I will do is, just to make things easiest for you, I'm going to put boxes all over the Asian session, because that's going to help you compare these two sessions together. So if I put these boxes, so what you're going to start to notice is the fact that whenever the market goes into the Asian session, you get little or no volatility at all. And then when the market comes into the London or European of the New York session, then you see lots of volatility. Take a look at this chart. So let's go back here and look at this. What do we see? This is during the London and New York session. So if we try to look at the pip range, we can see, I mean, look at that. Look at the pip range on this one, 74 pips. And what about the pip range on the Asian session? 31 pips. So the volatility is almost double. On this session we have 86 pips. That's the pip range. Asian session, 31 pips. So you can see, guys, how it is very important to understand when the markets are likely going to be volatile. Now you can do this with other currency pairs as well, and you will most likely see the same result, obviously depending on the currency pair you're looking at, and also the session that that currency pair is likely going to be active. Now the whole reason why I'm showing you guys is because one of the things that it's very detrimental to every trader is overtrading. Overtrading is when you sit in front of a computer, you just keep trading, even when the markets are not moving, even when the markets are not volatile, and that can be very stressful really on your emotions. So if you're able to pick the best time to be able to understand this, then you can pick the times that you can trade and the times that you can stay away from the computer. So for example, if you live in Asia, you know that you shouldn't really be trading the euro dollar unless you're going to stay up all night and trade, because that's what you're going to get that's when you're going to get the market being volatile. Anyway, I hope you guys do find this video useful, and if you do, don't forget to hit the thumbs up button. Scratch that. Anyway, I hope you guys will find this video very useful, and if you do, give the video a thumbs up, and if you're new to the channel, don't forget to hit that subscribe button. Follow me on TradingView, and if you head over to my website, you can join my Zoom trading classes, which I run every Mondays and Friday in the morning and in the evening. And also you can subscribe to my WhatsApp trading group if you want to get all my daily trades setups every week. Yeah, so that's it. Thank you guys, and I'll see you guys on the next video.